Hello everyone, welcome to ixamBee. This is the part 2 of the Reliance case study. In this Reliance rights issue, which is a big news, there are many terms I am going to tell you important for SEBI Grade A exam. Reliance Industries is now completely debt-free company. You must have read this. Mukesh Ambani makes Reliance debt-free before the March 2021 target. And all this has happened in 59 sessions. It's a $150 billion company now. RIL has raised 1,68,000 crore rupees in last 2 months through the country's largest rights issue. And the importance of this story is last time we understood what are rights issue, record date, rights entitlement. Today we are going to understand partly paid and fully paid shares, issue price, face value, called up capital and uncalled capital, security premium, intrinsic value, trading at a premium, and arbitrage. We have also discussed GDR last time. You have to go to that video if you have not gone through. In that I explained you that with existing shares of 618 crore, these are the number of shares, Reliance came out with an offer of issuing new rights of 42 crore shares, and somebody who has 15 share got the right to buy 1 share by partial payment. So let's understand what is this partial payment, what is partially paid shares. Before this, you need to understand these terms. What is face value? So face value is like a token amount, nominal value of a share. The company decides the face value, and normally for all understanding purpose you can consider that rupees 10 is the face value of a share, and the issue price is the amount to be paid per share. The company has kept a face value of rupees 10. In this case of RIL share, the issue price is 1257 rupees. In case of the rights issue, the face value rupees 10, so the premium is 1247 rupees. This is also the amount company will get because company has issued. So company will get face value of rupees 10 plus a premium of 1247 rupees. Total is 1257 rupees company gets by selling 1 share. But this 1257 rupees has not come in one go to RIL because this is a partially paid share. It has happened, the payment has happened in parts. So the price issued at 1257 to be paid in 3 installments. First installment is 25% on applications, and this issue was oversubscribed 1.6 times. We discussed that last time. Now understanding this 1257 to be paid in 3 parts. So first part is 25% of this. At the time of application you have to pay 314 rupees. Because you are paying only 25% here, face value is also considered 2.5 rupees. 25% of rupees 10, the face value of the full share. So because this is a partly paid shares, a part of the amount has been paid as of now. Therefore, these shares are called partly paid shares. These are listed separately. I am going to tell you that also. But first understand that this payment is happening in 3 installments. First installment is this, which this payment has already come to RIL. Second installment to be paid by May 2021, 315 rupees, another 25%, and the final, or here you can call it second call, but if there is a different kind of issue, the third call may be final call. So you have to remember this is second and final call. Remaining 50% of the issue price is to be paid in the final call by November 2021. Are you understanding what is the advantage for the investor here? And this advantage is only given to the existing shareholders. They only have the right to buy this partly paid share because now they are paying only 314 rupees, only 25%. So this amount is called money or called capital because this money has been already called by RIL. It has been actually paid also, and these two are called uncalled money or uncalled capital because this company will call in May 21 and this amount 50% remaining in November 21. Understand these terminologies very well. Since RIL is already a listed company, price of the existing share in India, the fully paid share is 1615. This price we have taken as on June 17th. It is already listed in NSE and BSE. And for time being, forget about GDRs. Discussed last time also. It is already fully paid, and these are listed in London Stock Exchange. What has happened to the new partly paid shares? So this is the new listing, listed on June 15th, 2020 as partly paid shares on NSE and BSE. Here, based on the intrinsic value, the partly paid shares shall be 403 rupees. What is that intrinsic value? Because the full share is 1615, so 25% means one fourth of that. So the value of the partly paid share shall be how much? 403. But the partially paid shares priced at 698, which is higher by 294, 73% higher. So it has been trading at a premium to the fully paid shares. May be difficult to understand. Pause video here. Read these number carefully. This is fully paid share. Here only 25% amount has been paid. So logically it shall be 403 rupees. But because the amount involved is lesser, so it is selling at premium. It is called trading at a premium. That is the difference between the value and the trading price now. So intrinsic value shall be 403, but it is selling at a premium because people feel value in that. So what kind of value people feel, and what is that arbitrage opportunity? See, the actual price of RIL fully paid share is 1631 rupees 50 paisa. If we see the cost of one partly paid share, that is coming 1657, how that cost has come. Suppose today somebody has to buy this partly paid share at 715 rupees. This is listed. The screenshot is showing the current market price. And first call company will do in May 21. That time you have to, if you buy this share today, partly paid share, so that time you will have to pay 314 rupees, and in November 21 you will have to pay 628 rupees. So total you will have to pay 1657 rupees if you buy partly paid share today. But if you want to buy a fully paid share, the value of both will become equal. So you will have to pay only 1631. So there is an arbitrage opportunity. This is cheaper. The fully paid share will look you cheaper. And the logic here is because you are actually investing lesser amount, right? So by investing only 715 rupees, you are going to be an owner, and this amount you are going to be investing later. So we are not calculating the time value of money here. If you calculate time value of money, then the calculation will change. Then only you will find the actual arbitrage is there or not. And also today I do not have derivatives on this to short. If that will come, then this arbitrage opportunity will completely go. While India was under the lockdown, RIL raised 53,000 crore by offering shares to the existing shareholders in this rights issue, and 1,15,000 crore to the stake sale in Geo. And RIL is completely debt free now. The value of the company has also reached to 150 billion USD. Now I am coming to the questions for exam purpose, and I am quoting Albert Einstein. The important thing is to never stop questioning. Appropriate questioning is very important, but equally important is finding out the right answers to that. At ixamBee, we brings you the top class faculty who can answer your most difficult question in field of the finance, because they are not only qualified enough, they have industry experience also. Same is in the field of English or exam strategy, experience of teaching thousands of successful students, phase 1, phase 2, which is going to be immensely helpful for your selection in SEBI Grade A. You want to experience the demo? Free demo is available at ixamBee.com. The first question is, when a company issues shares at a price lower than the face value, the issue is called. I think it is an easy one. When it is issued at lower than face value, it is called issuing at a discount, because company is giving at a discount. In the video we discussed about the selling at premium, and rarely companies sells at discount. Companies Act prohibits it except in case of the sweat equity. You understand what is sweat equity? Write me in the comment. If you don't, then also you can ask me, I will reply. Coming to the second question, in this case we discussed today, later RIL decides not to call for the last installment of 628 rupees. So this is an assumption. So if RIL decides that the last and final call, 50% of the value, we are not calling. So what it will be called? You call it buyback of share, redemption of share capital, reduction in the share capital, diminution of the shares, or forfeiting of the share capital. I am telling you, pause the video, you are going to mark your answer wrong. Most probably wrong. The correct answer here is, it is called reduction of share capital. As per section 66 of the Companies Act, reduction of share capital is regarded as one of the process of decreasing the company's share capital apart from redemption of the preference shares and buyback of the shares, which are governed by the other provisions separately. Many a time companies do buyback, especially when they feel that the market price of the share is not reflecting the true value. They believe it is higher actually. So reduction of the capital can be done. In this case, it is simply called reduction of the capital. It can be done in respect of the capital not paid up, extinguishing or reducing the liability on any of the shares, or cancel any paid up share capital which is lost or is not represented by available assets, or by payoff of the paid up share capital which is in excess of the needs of the company. Now I have a follow-up question for you. What is diminution of shares? Will you write in the comment? And this is the question I asked you last time. In the RIL rights issue, what amount per share has RIL received as on June 15, 2020 after the first call? So I think this is easy if you have understood the story well. This is 314 rupees, 314.25. Money on application is the amount received by the company, not 700 and something, because the share is getting sold in the market. That money never comes to company. Company gets the issue price. The company will receive 314 rupees. Later the company will receive the remaining amount, the second call and the final call. Again, one follow-up question. When the price of the share increases in the stock market, what does the company get? So all three follow-up questions, please discuss in the comment. These are the types of questions which are going to be asked in the SEBI exam. These are theory but based on the recent news. If you have any more queries, reach to us at 920552408. Don't forget to subscribe the channel right now. Press the bell icon.